Good morning, everyone. Today is November 17. We didn't quite make a video in a while, so I decided to come back. I was a bit busy in some situations that have come to my attention, and well, I guess that's something that I should not talk about here because personal matters. The person who's probably watching this video know about it, but anyway. So let's pick it up from where we left. On the last video, I think we're checking on the gold and see how we're doing. We actually opened up a trade and I've decided to keep it open. I actually saw that the gold has started to do a turnaround and now go to our position, which gave me two situations actually. I should just lied and say, oh, all right, we close this position and break even, not considering that most people probably knew, or I could make a point out of it, and as well as to teach the person that say that this is not right and I don't know what I'm doing and I should study more. Sure, go ahead, man. All right, and I've decided to take this into consideration to go now, and it's a very good position that we can learn something useful instead of just attacking someone. All right, forget about all this little comments that I'm making. It's just a bit fun for me. Anyway, so what we're talking about, what the situation that we're talking about a hedging situation that might be we might be looking in a very near future. That is because price has moved all the way up to that trigger zone, back to it, so it no longer is considered for me a trigger zone. And that's why. And why is that? Because it price did respect, but it's sort of not respected much as it should. What I'm doing now is actually calculating the possibilities of having another position that should be on the other area. For that, it's important that you change your try not to change your trigger zone most as you can. But if you have to, check where the price has bounced last time. So in our case here, we have the price that bounced over here. That's about, how much loss are we talking about? That's about 1% loss from one point to another. It's from the point that we open up the trade to another point. And it's something that's really important. You're going to ask yourself, how can you be sure that the price is the price is not gonna go bounce there again? And how can you be sure that we might have now a bullish side momentum? Well, it's very simple. Remember on one of the videos I talked about how you dissect the market and you go from time frame to time frame in order to understand what price action is doing. Those are very important factors, so that's what we're going to do right now. So if we're going to check on the monthly basis, we had 3 connected points which are led to that massive box that I draw. That box is there to represent the monthly higher. Also, what I mean by that is the monthly higher point that I think is most important based on preview price actions or what he had done last time. So you have here, for instance, we have on 2020 that we have 1 point that it touched on this side, which is the price of as high as 2066. We have also another point in 2022, which is 2066, and we have other point as well that it goes as much high, I think, as that point as well. Let me just take a look quite here. So that actually is 2060. So those are very highly points. The problem that I'm having is if you check it correctly, we look like that we start building higher highs and higher lows, and that by itself it's to suggest the possibility of us having a market that's going out for a bullish momentum. So let's dissect even more. Let's do the weekly. What the weekly is doing, what the weekly is telling me. The weekly is telling me the same exact thing. Actually, by now, I'm not going to consider this zone anymore. I'm just going to consider stronger ones because it's getting close to it. And that's where we want to hedge our account in case of a bigger loss. Actually, it might be wise if we open a position straightforward to sell account, so it's short the market even more than we already are. That means exposing more risk, that means a possibility of a bigger loss, and that means a higher risk, a high tolerance of risk. And some people don't have that. It's okay, no problem at all. But I do the same thing as I always do. I take in consideration the fact that we have a very, very, very strong point in the market and have been consolidating for 3 years right now. Actually, it might be 4 now that we are in November, so let's say 4 years. Might be 4 years, something like that. And now we are coming closer to that same point, to that exact same point that we have touched about 3 years ago. And the year that followed was the same. Is a point that it's shown to be very strong, and those are the things that I look for in the market before making any decisions, actually. So let's go to the daily chart, and we can see that we are actually downside, and we could open a hedging position just in case, but it doesn't seem to matter that much, because if the market turns over here, there's no point for me in open a hedge trade just to be long and then loss at all. What I can do, and then what I will do, is open one down to over here. That means my risk is gonna be so high, but so high that for me is not valid to lose any more money out of it. So that's the thing. That's now where we really should use a stop loss. That means that we're not gonna hedge the account. We're just gonna use straight stop loss and make a little loss out of it. It's okay. We already done 1 profit. We already done 2 profits mostly, and 3 actually. And there's no point for me in continuing this trade since it's on that verge of this point. So that's the maximum I'm allowed myself to lose. That's the maximum I'm allowed myself to be on this trade, because there is no point whatsoever, since we are arriving at a very good position that we tested for the past 3 years and has shown us very likely. So what we're doing is actually just increasing our odds of success. And basically what we're going to do is just close this trade just in case there is a loss, and find a better position to start with a lower risk. That's what we need. We don't need a lot of exposure. We don't need a lot of risk, because we can open the trade always in another time, and that's completely fine. So I'm just gonna do one thing, which is I saved some close medium. Yeah, that's correct. That's my closing here. I actually should do one that's a really good thing actually. I'm gonna do one that's just close loss. Oh, that's it. There we go. And we will be looking at now let's calculate what loss, how much of a loss we are looking for. And it's actually, I didn't quite look this right. Let me go to the Excel first and see on my data actually. Yeah, so what we're looking for is what I need to find now. I need to open someone else, sorry about that. Compound, I'm just gonna go to metals, and I'm just gonna go to no, I do not wish to move. This is something else. Excel. Let me go to my bookmarks. Speed dial. Nope. Purpose. I need to find actually, yeah, in here. I sold them, but didn't realize it was open already. Metals. Let's go to the metal charts, and let's take a look firstly at the flux. See what the flux is telling us about the gold. That for me is really important. So, what the flux is telling me about the gold is that we've been recently very low in the markets now. The market is very low in terms of volatility, in terms of how much people there are in the market right now. We have an open interest that have been fairly low. The interest on the market have been fairly low. This is all open interest. You can find that anywhere really. It's just I think you can find that on the book maps as well. There's some twos. I think level 2 also have it, if you are familiar with the 2, and as well as market order and break orders as well. So yeah, this is from last week. We have now, it's from the 7th of November. Yeah, so the beginning of the month. We are now not in a very good position to be short. It might be actually wise to look for long. That's further confirmation for me that I should. That was what I was worried about. That was the situation that we had on the higher highs and higher lows. That's what makes sense for me out of it. So we'll go back into the gold, and it might be wise now to take a look at the gold and check for possible break of this higher these all points that it was. So what I'm going to do now, I'm just going to close the trade in case of close loss, which is that little red point over there, and after that I will just look at the market. I will just follow it. I will just follow it for a couple of days, a couple of weeks, take notes, see how it reacts to this little trigger zone, and then after this actually is quite big, and after that I take consideration those notes and then make my decision out of it after that. But it is possible that we are looking at an increase of the gold volatility, of the gold price. So we might be looking to buy more of the market than short it. Well, with that being said, I think it's enough for today. I'll let you guys update it. These are the 2 points that we have right now. If we pass that point, we close it. If don't, well, we still can make a close on break even, perhaps. And if we can, perhaps it's not a bad idea to close it on a little bit of profit. I don't think so. Close P, yeah, just close a little bit of profit. Something that is actually happening on the other markets as well. We have the euro situation, and I mean right now, the euro situation where I took profit of a hedging position, and now I was waiting for the market to lower its standards so I can go back and close on break even, and also on the USD against the Swiss franc. And that's also really interesting. I just open up to check for myself. These are where I've closed the hedging trade, now waiting for a re-hedge, or actually just wait for a close minimum or close in a little bit of profit. Those are the two things. I already made some profit out of it, so my risk still this much, I believe. Yeah, my risk still this amount, 0.66, so it's still the same, didn't change. But now we have just a little bit of profit over to the bearish side, now waiting for a comeback, and the market could go to our position back again. Well, anyway, thank you very much for watching, and see you next time.